That's right, you're watching Africa Trade and Business. I'm Bronwyn Seaborn, and on this episode, we take a look at the progress being made to develop Africa's capital markets. And that's by taking a closer look at the latest findings from the Africa Financial Markets Index. So let's jump straight into it. Joining me for that discussion is Jeff Gable, who's the head of macro and fixed income research at Absa. Jeff, thanks for joining us today. So the 7th iteration of the AFMI has been released. It covers 28 countries and encompasses 80% of the population and the GDP of Africa. So before we take a look at the detail of the most recent index, let's start off with understanding the index itself. How has it developed over the years to what it is today?
Well, first, Bronwyn, thanks for this opportunity. Second, it's something we're really excited about. And third, to get to your question, the Absa African Financial Market Index isn't, from the title, it feels like the sort of thing that will tell us where the biggest returns are, right? This is the stock exchange that's done best, or those are the bonds that has done best. And on that side, I'm afraid I'm going to disappoint. Not really about that. What we're trying to do is really think deeply about financial market development, getting financial market ecosystems up and running on the continent so that they're ready and competitive in terms of grabbing capital, either global capital that wants to put itself to work here on the continent, or getting the money, frankly, out from mattresses here on the continent and into the financial system where it can really do some good.
Jeff, is it data for data's sake, or is it actually used by key players such as policymakers and central banks to address some of the issues that come through in your research?
So it's a great question. I mean, one of the things we want to do, and this is, as you said, it's the 7th year of this, what we really want to do is get discussions happening amongst Africa's policymakers. So from day one, when we think about financial market development in Africa, it won't surprise you to know that South Africa is placed sort of first. But what we've seen over the 7 years is that most countries are improving those scores. And within countries, there's very few that can't both learn from one of our African peers, but also in some ways give positive examples to others. So often a country will score quite well in one or two of the themes that we look at, but might score quite poorly in one or two others. And so it's those kinds of discussions between African policymakers, between countries, that I'm most excited about. And then maybe in an easier fashion, what we find is that each and every year, this is an opportunity to get sort of the policymakers and the regulators, sometimes the politicians, the users of capital markets, and those that provide capital. We get them all together and have a discussion, highlight where positive progress is being made, list sort of one or two what we sort of label as low-hanging fruit. Here's something that you can look at as a country that can really enable your financial markets going forward. So lots of discussions taking place, lots of roundtables, really, I would say, quite a positive engagement.
Okay, so given its objectives and its weight then as a reliable source of information, let's take a look at this year's findings, because it's been quite a year if we sum it all up. We've had war, inflation shocks, and of course we're still feeling those ripple effects from COVID-19. So amidst it all, what is your research telling us about Africa's financial markets right now?
Ronald, I think you're quite right. It's not easy out there, and I'm afraid it doesn't look like it's going to be getting any easier anytime soon. So the good news in this environment, of the 28 countries we have in the index, 15, so just over half, saw their scores improve over the year. At one level, that doesn't feel like a very high bar, but as you mentioned, we've had challenges around sort of global interest rates rising, global liquidity drying up, all these various things hitting markets. Therefore, if we think about the index and the scoring in a slightly different way, if we think about the passive parts of the index, we mark countries up, for example, those countries that have larger stock exchanges, that have a greater liquidity in those exchanges, that have larger foreign reserves. Well, in many cases, those are passive decisions. There's nothing that you can do today that suddenly doubles the size of the JSE or suddenly makes trading in the Ghanaian cedi suddenly accelerate. If we look at those parts of the index that I would say are kind of actively managed, right? You've introduced more corporate credit ratings. You've generated an enabling environment for ESG assets. There's the right environment in the right countries for Islamic financial products. You've engaged in adopted global standards in another way. There, I think the story's much, much rosier. Each and every year, across all of the countries in the index, we find at least one item in which policymakers, in an active way, are developing their financial market ecosystem. And again, the point of all this is just make it easier to put money to work, to make Africa more competitive in attracting both domestic and global capital.
So does that then indicate to you that some sort of foundation, at least, is being laid so that when global markets bounce back, Africa can then really take full advantage of that?
Yeah, I think so, right? So when we started 7 years ago, there was a pretty big spread in country scores. South Africa at the top, a fairly big gap to Mauritius, and then after that, the gaps were very large. One of the things that we've seen over the 7 years is that some of our best performing countries, or almost always the best performing countries, tend to come from the bottom half of the index. So those are countries looking to catch up, to put themselves in a better space. Over the 7 years we've been doing this, a country like Seychelles has improved its score on the index by about 50%. Other big standout performers, countries like Uganda, Morocco, have improved their score by about a third. So not small changes that are being made here. It really is African countries, African markets getting themselves sort of more ready, more competitive, better positioned to put capital to work.
So what then are some of those key steps to creating this enabling environment that will trigger that global interest? Because you talk about that there are these strides being made. So what are some of those key steps that contribute to that?
Let's think about one of the most transparent ones, right? So over the last number of years, there's been a global push towards sort of sustainable finance, towards ESG related instruments in labeling, environment, and others. And hardly a day goes by where we don't see a statistic where globally sort of X amount of money is now in sort of impact funds or sustainability focused funds. Well, 5 or 6 years ago, frankly, here on the continent, for all of our development needs and for all of our ESG related projects, few countries had any enabling legislation. Few countries had any sort of standardized rules. Few countries had incentives for these sort of products. And what we were effectively doing at that point is telling the world it's wonderful that you're putting the money in these pools, but we as Africa aren't really ready to compete for it. Now, I'm really happy to say in the 7th version of the AFME index, we've got 20 of the 28 countries that have put in place sort of regulation or incentives and sort of the enabling environment for sustainable finance. And we've got 9 countries that have issued into it. So there's still more space on that side, but that's a great example, I think, of Africa making itself ready for finance.
Is there a country that stands out to you on that front from an ESG perspective that is really pushing this forward and seeing the returns from doing so?
So look, we have really positive examples in a number of parts of the index. But just consider some of the new products or new product pushes we've had in that space over the last year. So Mauritius has set itself up for carbon markets. You had the first blue bond in a small island nation like Cabo Verde. Here in South Africa, we had corporate issuance into the gender link space, sort of a bond in which the coupons would move depending on how many women-owned businesses were in this big firm's supply chain. So lots of really positive developments happening in that space.
Market size and liquidity has also been hard hit across Africa due to those tough global conditions that we've been speaking about. Are we seeing enough effort being made to firstly encourage investment, perhaps through mechanisms that allow for transparency on the one hand, to address that? And then on the other hand, are we seeing enough diversity through products? Because we talk about, the ESG products that we are seeing come through, but that's just one way really to diversify a market, right?
I think that's right. And I think you've hit the nail on the head. The hardest part of scoring in this year's index has been just what's happened to market size and market liquidity. To be able to compare across countries, we measure all this stuff in dollars. Sitting here in South Africa, we know what's happened to the rand. I just traveled overnight from Kenya. It's not been very fun for the shilling there. If you're in West Africa, Nigeria, Ghana, others have been really hard hit. So the moment you measure the size of local asset markets in dollars, this has not been a great year in that space. So there's a good example of where, in a passive way, we've sort of gone backwards. At the same time, though, there's lots of things that countries can do to help enable markets to build local market size. One of the themes that we look at, one of the 6 pillars in which we organize our thoughts in the index, is around sort of the capacity of local investors. And why does this matter? As much as we often focus on finding ways to bring global money here into the continent and put it to work, global investors will feel a lot more comfortable bringing money in if they think on the day that they need to realize their profits, there's somebody else that's able to take the financial instrument from them. So the development of local markets is really important. One of the ways we measure that is just around the size of local pension funds. And would you believe in that space, of the 28 countries we have in this index, number 1 ranked in that space is Namibia. So not a large country, not a super wealthy country, but pension assets per capita there, so pensions per person, of almost $4,500. Now compare that to some of the larger countries on the continent, whether it be Angola or Ethiopia or Egypt. Pension assets there of less than $100 per person. An awful lot more can be done in terms of generating an environment there for local, long-term patient capital, and through that, helping the entire continent raise funds as well.
Overall, Jeff, as we wrap up, over the past 7 years, is the story one of rapid improvement or really one of slow progress when we come to building Africa's capital markets? Because year on year, we do see the wins, right? There's no disputing that. But are they happening quick enough?
Well, listen, I gave the examples earlier, right? A country like Seychelles improved its score by half over the last 7 years. Countries like Uganda and Morocco by more than a third. So there are certainly countries out there with a real focus on this and making tremendous progress quite quickly. There are others for which scores are moving much more slowly. There's a handful, to be quite frank, scores move backwards. For example, South Africa's score gone a little bit in the wrong direction, not so much because we're making markets themselves less friendly, but just the economic environment that we face here in South Africa is a little bit less attractive to capital. But for the most part, we're seeing most countries move forward, some moving forward very quickly indeed.
Jeff, on that positive note, let's leave it there. Hopefully we will be catching up again with you this time next year to check on the 8th iteration of the index. But for now, let's leave it there. Jeff Gable is the head of macro and fixed income research at Absa. And on that note, we've come to the end of the show. So from me, Bronwyn Seaborn, and the rest of the team, it's goodbye for now. And we'll see you same time, same place next week for more insight into what's happening in Africa.